What's going on, guys? Brian here. Today is Tuesday, July 30th, 2024. And oh my, what a day it was in the market today. I love trading days like this. This type of volatility and price action is what made me excited to become a day trader when there's this level of opportunity to make well over 100% return on 0DTE options. The SPX had a beautiful bounce right at a key level. Guys, if you're new to this YouTube channel, I suggest you subscribe. Check out the videos I've been releasing daily. These levels and zones were shared over the past couple weeks. Exactly as I mentioned yesterday, they pay out in dividends when you are prepared and you know what to expect. We will be taking a look at some gamma exposure, so adding a little bit extra data to our ideas. We will take a look at some thoughts that I had a little bit here earlier in the trading day. A trade idea that I opened earlier today, what I would have been thinking at that point, why did I open it, and kind of rewinding the clock, going back to the start of the day and see what we can do to prepare for these types of days. Let's start by first taking a look at the SPY and jumping back earlier in the morning. These are the gamma exposure levels that was shared in yesterday's video. So these are my primary GEX levels for the week. 545 is a very powerful strike, as it is the absolute gamma strike. It is the second highest negative gamma. It is the highest open interest strike, and it is the strike where below here is where there's a lot of negative gamma. So the positive GEX is above here. Below it, there's a decent amount of negative gamma. So below this strike, we can expect some sort of expansion in price, especially when we layer this with other contexts. Here is a break of that trend that's been shared for the past couple of days in the Qs. We see that there was a rise in the VIX. We know that significant strike prices were breached. Our demand zone, in which we have discussed in the past couple of videos, was also breached. So there's a decent amount of context around price breaking, not just one singular level, but multiple things being broken at the same time. This is our early warning sign that something is off. In yesterday's video, I expressed how I'm taking the risk on some calls for next week, Friday, as tomorrow's the FOMC announcement. We have Apple's earnings report later in the week, as well as some other big tech earnings. I figured it's worth the risk for me, for with all this selling pressure that's come in, if any type of positive news comes out and the market can break above 547, we're going to have some sort of a massive rally, or at least that's what I'm expecting. So low risk, high reward. But just because I'm in calls doesn't mean I need to sit there and just get destroyed when I see enough signs to expect the market to sell off. Here is our supply and demand zone that was covered in yesterday's video. So even as the market is still up here, there's enough signs and context to expect today to be the day in which we break down. First warning for me came on the breach of 545. I decided to grab this put diagonal. So this is a 3x8 DTE SPX put diagonal. This is about one after the market opens here. Take note of the strike in which I decided to make as the point or the apex for this diagonal, because we'll take a look at where the market actually closed, or we can ruin the surprise. As you guys can see, we ended up closing right around 440. I knew I wasn't going to be around for the afternoon session for power hours, so I didn't go with the 0DTE. Regarding the put trade, as I did not think the market was going to stay at the lows, I was expecting the market to sell off and bounce, which is something that was covered here as I was sharing some of my ideas earlier in the day as why it is not the time yet to go long. You want to wait for some signs of confirmed strength before going long. Otherwise, this just looks like a bear pennant that's forming. So this is still early in the day here. So this is about an hour after already getting that put diagonal, which was doing really well by the time the market sold off here. We ended up getting that bear pennant / bear flag ended up working out pretty nicely. But again, this is just technical analysis. This is just a little bit of time and experience in the market and knowing what to expect. We can see that the 9 EMA was aggressively selling off. This is a nice consolidation period. So in terms of when to get in, when not to get in, you want to have a strict set of rules for yourself whenever you see this level of volatility, as this is more than a 1 standard deviation drop for the SPY from the open. This type of price action is already a warning sign that this is not the type of dip you just want to come in and buy. On top of that, when we take a look at our gamma exposure, this is at that time. So this is 11 a.m. For purposes of keeping this video shorter, I can't cover every single thought process that occurs throughout the day. The intent of these videos is to give you enough bite-sized pieces of information, and you guys can see how it has been paying off every single day as the information from one video just rolls into the next and it continues to compound. If any of this is confusing to you, just watch any of the previous videos as well as the subsequent videos that will be released on this YouTube channel, and the information will start to compound in your brain, and eventually this will just become second nature to you. So at 11 a.m. Eastern time, this is the spot price for the SPX. It is breaking below this negative gamma strike. this inverted Wi-Fi symbol. So whenever the gamma exposure is trending up on the positive side, I like to call it the Wi-Fi signal. You guys know when you look at your phone and you see these bars and they're increasing like this and it's a stronger signal, that is usually an indication that we're probably going to end up rallying if price is holding up above key positive gamma strikes. In this case here, we're now breaking below a negative gamma strike, and we see that these negative gamma strikes are increasing to the downside. So 440 becomes an area of interest. But with this much negative gamma in the markets, we are well in negative gamma territory. We are below 545 on the SPY. One can just take a look at this glance and see once this level is given out, this does not look good. It does not look like the market is going up to 5,500 here for today. The viable targets at this point becomes 420 if you like to trade deep out the money options. 440 is great, but this option will be pretty expensive. 425 becomes a significant strike. If 425 breaks, we have 400 as the expected targets, but there's no reasons at this point to think that the SPX will remain below 4,000. So this structure alone is giving so much information regarding important levels. If price holds below here, we're likely going to head down to this level. If price breaks below this level, there's enough of a buildup of negative gamma to 4020. If 420 breaks, this just looks like a mess down here, but this type of negative gamma is usually just where they like to trap traders as people become over leveraged or the fear and the panic kicks in and they start buying these out the money options. They start thinking they need to hedge, and it becomes the perfect place to actually sell puts below a strike like this. So 420, anyone buying puts below 420 is playing a dangerous game, as it's just that hot potato. How low will it go? There's not enough signs to believe we're going any lower than 5,400. So 5,400 becomes the level to tell yourself this should be our major support for the day. Your target is 420 and above. As I was taking a look at the gamma exposure profile, I decided to open up this about 30 minutes before, again, the key levels broke. I saw enough once I took a look at the gamma exposure, and I saw this break down below here, as well as some other confluences and contexts. But for the most part, this right here, I decided to target that 440 strike because I'm taking a look at the gamma a little bit earlier than here, and I'm seeing the significance of 440, telling myself, hey, if this level breaks and we go down to here, the opportunity for 0DTE call buyers is going to be scalping back up here, or 0DTE put sellers anywhere in this area here. Pretty much anywhere in this range became a great opportunity to sell puts, with the idea that the SPX is going to close either at or above this strike. If we close above this strike, this becomes the sensible level. This is N1. This is the highest negative gamma strike. Again, this is at this point in time, but there's a decent amount of negative gamma spread across the board. And it's pretty impactful that this level is sticking out in combination with this. So these two are the levels that become super important for myself when I take a look at a gamma profile like this. This is N1 and this is N2. P1 becomes out of the question now because it's all the way up here. In order for P1 to become in play, P1 is the highest positive gamma, the market would have to reclaim 475. So until it reclaims 475, I'm not interested in 5,500. We know what our playing field is for the day. Once price is below this level, this is our playing field. So we're going to devise a plan for this. The market ends up closing right in that 440 area, but also pay attention to the type of price action that happened around 440. Pay attention to price action as we came down to this negative gamma strike. This zone that's on my chart, let me actually clear all of the studies for a second. These are the levels drawn in that I shared a couple weeks back, if I remember correctly, just straight from price action on the chart. And I said, mark these levels on your charts as they will lead to either an A or an A plus opportunity for this week. That was covered in yesterday's video. And here comes your opportunity. Guys, a 50-point bounce off of a level is massive opportunity, especially where majority of the move came in a straight shot. 50 points on the ES is $2,500 in profit with one ES contract. That's if you trade futures. That's what this opportunity is. For the average person living around the world, $2,500 covers your rent. Not where I live in New York City. My rent is almost double that. But for the most part, these are life-changing opportunities. And that's why I get excited, because when I first started trading and I understood that there was potentials or there was opportunity for this, I was never able to look back. The question always became, how can you spot or identify these types of opportunities? And that's the intent behind using tools like Quant Trading app. That's the intent behind why understanding technical analysis becomes important. If we clear this chart and I turn back on our studies, and we take a look at the quant trading app script, this is our QTA buy zone right here. But even though I decided to short here, to be honest, I would not have taken a negative delta trade. The only reason I took the negative delta trade is because I'm in calls for next week. I'd much rather spot when is there going to be an opportunity to be long. Hence why earlier in the day, I was just trying to share ideas on what you want to look for being long. There's enough context to expect we're going to go lower, but I'd rather sit on the sidelines, let the markets throw up for a bit, because that's all this looks like to me. It looks like it's just throwing up. It's almost like it's sick. Once it's no longer sick and it feels good about itself, it will recover, and I will be there to hold its hand as it bounces right back up. That is the dominant style of my trading. I like to sit back and wait for where is there the least riskiest opportunity to be long in the quant trading app buy zone, in a demand zone that we can see clearly from our charts with all of our additional confluences. Let's take a look at the SPX trade engine for QTA, and let's kind of rewind time and go back to the start of the day and see how this unfolded. So I've already went ahead and downloaded the images, so let's just go back and play back the tape, as I think this has been a great way to actually add confluence and build confidence when looking for a setup. If you don't know what QTA is, it is just short for Quant Trading App. I'm the lead developer at Quant Trading App. This trade engine is something I personally built. Link is in the description to Quant Trading App. I developed this as I'm constantly looking for ways to save on time in and outside of the market. I want to be able to just look at a graph with as much context and information as possible. This data right here, this gamma exposure, provides so much context for myself. When I can see it overlaid on a chart with candlesticks, that just adds even more confidence to trades. So at the end of the day, I like to go back and rewatch this, and it's just building extra confidence. And when I see these setups, I'm sharing this for you guys here on YouTube that might not have seen anything like this, because to my knowledge, this does not exist anywhere else. So we'll play the tape now. The start of the day, the first things we want to access obviously is our significant 1 sigma close strikes, and we're just paying attention to price action. It has not interacted with any key strikes yet. And now we've just come down to our expected move from the open as we hit here. We also have that coincided with the expected close. So that's our 453 area. Well, let's call it 450. We might as well just round these strikes to the nearest hold GEX strike. Let's continue to play out and see if there's a reason to take a trade there. There was no real confluence at this area. Price action was looking pretty bearish. We saw it on the SPY chart. We see it on our candlestick chart on a smaller time frame. We see that the EMA is selling off. There's no real confirmation. This is updating every minute, but it's sending out these pictures to the Discord every 5 minutes, and it's forming these 15-minute candles, as the 15-minute candles are excellent confirmations for bigger trades intraday. So let's continue to play this out here. And now we see what's pretty significant is the absolute gamma strike now dropped down to 420. This is not a surprise, as 420 was already a strong gamma level. Price at this point broke past the 1 sigma expected range and the expected close for the day and the expected move from the open. So this is pretty nasty selling pressure, but we can see where the first signs of buying happens. It happens just as the price hits the expected move for this time frame. So this zone in which you're seeing here is the expected move for each 15-minute candle. So in other words, if this pops up right here, that would be the expected move for this 15-minute candle. This drop right here was the expected move for this 15-minute candle, so it ends up holding out right here, just as we're around the 1 sigma expected range, so we can see the first signs of selling pressure slowing down before things drop. Now, this is where things get pretty powerful, pun intended. Our QTA proprietary power strike now drops down to 5,400. As I've been mentioning in each of these videos, when this strike latches on to another significant strike, that's where it's actually more important. Towards the second half of the day, it's pretty important, as it's intended to try to gauge where it thinks the SPX is going to gravitate towards within about a 10-point range or so. But for the most part, throughout the day, it's pretty significant if it latches onto a strike, because it means if price was to hit this level, this is the strike that has the highest amount of put volume right now. We can see prices stalling out around here. We are well past the expected move for the day, as the market is down at this point negative 56 points. This is our highest negative gamma strike, 420. We already identified that 420 was significant, and we identified that 400 was pretty powerful too, but at the same time, there was no reasons to think we would go below 400, as this graph is indicating with all this information on one chart. As we play this back now, we can see price is holding here. It's expected that it's going to stall out around this gamma exposure strike. By the way, this is about an hour of consolidation. If you trade 0DTE iron butterflies and you open up a trade right around here, or a 0DTE iron condor, that is more than enough time to hit a decent profit target. About $1, sometimes almost $2 in profit you can make depending on how wide you make your wings. But for the most part, price consolidating around a strike in which it would. Now it drops down and it hits the expected move for this 15-minute candle, and we come down to our significance area. We can see that the absolute gamma now is here. So we have the absolute gamma here, we have the power strike, we have the highest negative gamma strike, and this is also the strike with the most amount of put volume. It's very hard for the markets to break down below a level like this. This becomes a supercharged, powerful support level in a case like this, not to mention that it is a whole psychological number of 5,400, which was addressed either in yesterday's video or the video before that. So if you're looking at the chart like this and you see this here, you already have your demand zone. Again, we'll turn all the studies off. You're looking at your naked chart, you have this demand zone. You've come across a random video in which I've released on YouTube over the past couple of weeks. I've shared these levels. There's similar confluences on the ES, the similar confluences on the SPY, but for sake of not making these videos 2 hours long, I'm going to just hyper focus on the SPX here. You already have this level. So price is at this level. It is on your chart. You have your SPY. You know where the high negative gamma strike is here in the SPY. You can also just take a look at your chart and see where there's support here. It's a little bit lower on this chart here for the SPY. Let's hop out. Look at the Qs. Where are the Qs? The Qs are at the highest negative gamma strike for Friday's expiration. All these zones on the chart are from the quant trading app script, so I'll just turn this off and on. So you have extra confirmation, extra confluences in the NASDAQ hitting a key level from QTA. We know that 455 is a massive gamma strike for the Qs, as it is part of this script for today that is calculated from pre-market. We have similar confluences in the IWM, coming down to the QTA intraday buy zone, as well as the weekly buy zone. All sorts of confirmation, all sorts of things screaming at your chart. All sorts of confirmation, all sorts of confluences screaming at you. If we take a look at the ADD, it comes down to just about the zero line all around the same time. So all of this is happening right here. We just barely get close to the zero line. It ends up bouncing. It doesn't go back to the zero line. So it is holding even above the zero level as the SPX is here, as the Qs are in the buy zone, as the IWM is in the buy zone. All of these things flashing at you saying like, hey, there's an opportunity in your face. What are you going to do about it? How do you make money off of this information? That's where you can choose if you want to buy calls, sell puts, run some sort of out the money butterfly, maybe targeting these key strikes. We already know where the 1 sigma range is. This has not changed all day here, so this is extra confirmation and confluence for this is the area of interest. Usually whenever the market goes past the expected move, we can kind of target the ranges, as the range is going to be larger than the expected close, as well as the 1 sigma close. It's always going to be wider, as the range is usually wider than the actual open and close. Let's continue to play the tape out now and see what happens. So now we hold this zone here. The AG ends up bouncing, so the absolute gamma strike, and now we have this new support level established again of 420. We can see the absolute gamma is shifting up. It's shifting around here. At this point later in the day, the absolute gamma strike is going to bounce all over, but we can see what's happening. Not much else going on right into the close here, as we end up closing right in this area. We ended up making a spike or a little bit of a attempt to go higher, but at this point, with all these things lined up here, the 1 sigma close is going to end up acting as some sort of resistance. Here's our break, here's our bounce, here's our retest. Break and retest. Same thing if we go back to our chart here. Here's our breakdown. This is a key level for us. This is the breakdown. This is our retest. That first retest ends up leading to another trade opportunity. Same thing if we take a look at our SPY. We turn on our zones from a couple days ago. What do we have right here? Break and retest. This is our first breakdown. Boom, level breaks. We come back up to the zone, just about touches it before it's rejected, ends up touching it into the close, gets rejected. So this is our breakdown. This is our first and second retest here of this area. It's as simple as that. Break and retest, supply and demand. I'm showcasing some of the advanced stuff like the gamma exposure as well as the SPX trade engine, but as I'm trying to show you guys how colorful trading can become, especially when you're taking data-driven trades. There's additional confluences we don't need to cover, but here is the previous put block on the Q's option volume charts from Quant Trading app. This is also something that's built into QTA right here. We also have the SPY. This was the volume range for today, and this is also the #1 put volume. Same thing. So on the SPX, it's hard for the SPX to hold below the highest put volume strikes, you can interpret this as no one is bidding that the market is going to go much lower. It doesn't mean it always has to be this way, as the second highest put volume strike might be one strike right below it. So this chart is not going to show the second highest volume strike and the third highest volume strike. At that point, you have a million levels on your charts, and there's more than enough on this chart. If we go back to the beginning of the day, we just need to know where's the highest put volume, what is our expected range for the day, what is the expected move for the day, what is the 1 sigma close. So on these types of days, where does the market generally close, what strike price is? And then we have our neutral. So this is pretty much, if we're expecting a flat day, this is where the market is going to end up closing around. We have our max pain strike, we have our absolute gamma, and then we have this proprietary power level. So as the market progresses through the day, all of the data is being recalculated and it's being mapped out and plotted on a chart with these candlesticks that can lead to massive trade opportunities. In conclusion, if we revisit the option that was mentioned at the beginning of this video, the 5,420 strike, the reason this is the one I'm choosing to highlight for this video is because this was the gamma strike that was pointed out as significance. Knowing if the markets was below 420, anything below here, in a sense, this option would be at a bargain or a discount, and that would be in this area here. So for a $6 option, this is obviously a great return, as it's well over $200. Even if you're entering pretty early right here and paying about $12 for the contract, that's just as the SPX hit 420. The drawdown would have been pretty bad, but in terms of the total maximum opportunity of a 400% return, being down about 50% to potentially be up 400%, there's at least enough meat on the bone for a good risk to reward strategy. But in this case here, anything in this area, we can see the volume that's coming in behind the chart right here. A lot of volume, a lot of activity. As what this is letting us know is there's a lot of participation around this strike. It is not a surprise, or it should not be a surprise to you guys or anyone trading with gamma exposure, as this strike was significant. If you have a smaller account and a $6 option is pretty pricey, I'm using the most sensible strike in this case here because we know the market is more than likely going to close above 420. So this is a strike that's more than likely going to close in the money. So if you're planning on holding until the expiration, which would be the 0DTE, that's why I'm choosing to highlight this. But if you go 10 points out the money, you can get an option that's pretty much going to be about half the price of that. So this is around $3 at its lowest, but let's just say you're getting filled anywhere between $4 to $6. There's still room here for obviously a major return because the further out the money you go with an option, the greater the potential return will be because the option is cheaper. So in this case here, getting filled for anything in this area, this is already 100% return. This is a 250% return, and this is well over a 400% return also, but at least the option is cheaper. And then obviously there's the far deep out the money option. If you're looking for the retracement back up to this zone and you're not planning on holding all the way until it hits there, you just want a cheaper option to have less risk out on the table. This option is going for around $2. Now, when I first started trading momentum options, these were the type of options I used to like, the really deep out the money ones where the risk was not too high if I was completely wrong, as I didn't really know so much of what I was doing. Now I prefer to try to trade the options that I think have some sort of a higher potential of actually being in the money, especially when there's extra conviction around the 420 strike or any strike for that matter, depending on the day. Guys, again, if you're new to this type of information, I highly encourage you subscribe to the channel, as I'm planning on pumping out a lot more videos, especially if I get good feedback from you guys and I know this is helping. More importantly, I want to know not only are you learning something from these videos, but you are actually capitalizing on it and actually making some money. If you guys are making some money, let me know in the comments down below. I would love to hear how this information that I've been pumping out has been really benefiting you guys. You guys are seeing time and time again, one video ends up rolling into the next day. The same information ends up contributing to an excellent trade the following day. Check out the previous videos. If any topics in this video left you a little bit confused, links are in the descriptions to some of the other videos that actually explain what the gamma exposure levels are, as well as the volume profile playlist. The core thought processes that I have whenever I'm dissecting the markets, I've essentially done a video on that topic. So just check the links in the description down below. Thanks for watching, guys. Leave a comment, like the video if you learned something, and I'll catch you on the next one.